The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, Wednesday's trade action, I would call it mixed. Wheat and corn found a little bit of strength. Crude oil, a little bit quieter, but still showing a little red in afternoon trade Wednesday, with soybeans showing more pressure. Concerned a little bit about that bean market. Livestock trade relatively mixed on the day as well. Let's talk about things. Joining us for market analysis today, Mike Zuzolo with Global Commodity Analytics. Mike, thanks for being with us here on Market Talk. Hope your week is going well so far.
Doing well, Jesse. Thank you.
Well, let's start right away with our old friend, the wheat market, Mike. Wheat, crude, corn, some of these commodities right now that I feel at least have a little bit of potential to the upside here. Wheat and corn, I would say. Crude is so heavily influenced by what's going on in the Middle East right now, but I feel like that there's some optimism there, whereas there's not so much optimism in soybeans. So let's dive right into charts. You sent me a crude wheat correlation, and I think this is a good place for us to start here today, Mike.
Yeah, and there's three things I think, Jesse, that have brought this counter-seasonal rally in the grains to a screeching halt after the WASDE report last week. And I think the first thing was the USDA did not give us a soybean cut in yield here domestically. Second thing is the South American weather shift and the possible pattern shift in Brazil, looking more likely now in center west Brazil, still a question mark in Argentina. We can come back to that. But the third thing is the China rally. The China rally on expected stimulus has essentially fallen flat on its face. And I think this correlation chart helps explain why the wheat market, along with some weather changes, is really not performing like it could be, given other areas of weather, given the fact that some of the French crop estimates that came out at the first of this week, production numbers the lowest since 1986. Prices in Russia up $10 to $12 a ton FOB in some areas. Ukrainian prices going up. Seeing a lot more activity. Who was it? Mexico bought soft red wheat from us earlier this week. Not playing any kind of role in this price action in supporting the wheat market. And I think it does go a lot back to the crude oil market. And crude oil, as you say, very rightly picks up the Middle East. The Middle East mindset is weaker because the United States has made it known. White House said it on Wednesday. We are essentially going to tie the hands of Israel on doing anything more in Beirut until they get aid into Lebanon. And that's a statement. That's a fact now. We heard that rumor, and the energy markets on Tuesday had heard that rumor and decided to take a lot of premium out of the crude oil market. And Israel has not reacted to Iran. The other thing, though, that we're not really seeing and talking about as much is China and the crude oil market breaking to the downside again because of the lack of the China stimulus. So most important thing I'm going to say on today's video with you is that China is now expected to make a press conference 10 a.m. China time on Thursday. And so this takes us into the end of the week. And what I'm watching for is that between the Argentine weather, U.S. weather, and the Chinese stimulus question mark, that the end of the week looks a lot different than the beginning of the week in this price action.
Well, thinking about China, I think that ties in well with talking about the soybean market. I'm very concerned with the price outlook here in soybeans. We broke it through some key support. Do we go test some of those summer lows, things of that nature? Let's pull up a soybean continuation chart and maybe expand upon this more, parlay this into soybeans. We're missing some of that China demand to some degree, things of that nature. You mentioned the no cut on the USDA report, things like that. So what's this soybean picture looking like? What are things telling you right now, Mike?
Yeah, we got a minor cut, but it wasn't worth really taking anything into consideration. I think to be very specific, that this chart I really like because the viewer will look at this and say, okay, there's three lines going across this chart, 840, 940, and 1040. And this is a annual chart that goes all the way back to 1973 for soybeans and lead month futures. And what I did several years back was wanted to see if there were any kind of almost Fibonacci or resistance support levels that really matter in the soybeans, because we all know the explosive nature of soybeans to the upside and to the downside. But this was back in the 2012, 2014 time period, coming off the big rally. What would give me the idea technically that this bean market is opening up to the upside, because we're trading down essentially where we're trading right now, around the 940, 980 area. This chart really shows nicely that 840 is a very strong long-term support, but if we go below it on a monthly close, we tend to stay below it on a monthly close for several months. And that's really important to me. The other extreme of that, and this is really the fun part of what I did when I did this analysis, was 1040. You go above that flat blue line at 1040 and you do that on a monthly close. Look at how the market tends to explode higher. So it takes a lot of energy to get from 940 to 1040, and you usually expel most of that energy. But if you can close on a monthly basis above 1040, then annually you tend to see 1, maybe 2, maybe 3 years above 1040. And I really like the 840, 940, 1040 levels in my long-term analysis. And what adds to this is the second blue line, the trend line that's coming off the 2001, 2002 lows. We've checked it about 5 times now, and that's coming in right around $9 right now. So that 940 level, if we go through that level on a closing basis, we make a new 2024 low. And if we do that on a monthly close, it would suggest to me we're going to go test that long-term support line back from the 2002 lows. And if we go through that, our next stop is probably 840. So after the report, the numbers to me suggest globally, especially if Brazil gets back on track on planting beans, it's still the leader to the downside, even with all this great buying that we've seen from China recently.
I'll pull up Nov Dees corn spread, Nov 24, Dees 25, the daily chart. Now, I'll make the note here too. Novi beans closed at 980 on Wednesday, and I know that we had some support at the Bollinger Band, I believe, at 984. So I'll make that note in passing here, and I'll let you pick up on this chart here, Mike. What are you seeing?
Yeah, excellent point. And this ratio is already starting to tell the market next year to plant corn, tell the farmers to plant corn, not beans, because that ratio is now down to the lowest level it's been since August, mid-August, before we made that big low in the markets after the August crop report. And so we're at 2.34 beans to corn on 25 new crop, and we're starting to buy corn acres at this point. And I think this is really, really important to watch as we get ready to hedge 25 corn, especially if that ratio goes even lower and it prefers the corn acres even more. That's going to probably put more pressure on me to get corn hedges on, because farmers are likely to react to that. There is a price point, especially given the corn yields that we're seeing right now in most of the Corn Belt, that producers, I think, will take the chance and plant the more expensive crop.
I think I said Nov 24 beans when I mentioned this chart. I meant Nov 25 beans versus Dees 25 corn. So my fault on that. I'll pull up the world soybean price chart as well, just to kind of sum up this soybean equation for us here. And you mentioned earlier Brazil trying to catch up with planting, et cetera, et cetera. What are some of the world prices telling you right now, Mike?
Yeah, this is where this chart and the next chart really show us why I think beans, one of the key reasons why beans are the leader to the downside. You notice in this chart that the U.S. cash price in red, at 411 is very close to the two prices in Argentina and Brazil. And I think that if we get back on track with planting in Brazil, you'll probably see, with those rains, river levels come up and farmers start to sell. And I think we got to be ready for that. This helps explain, I think, fundamentally that technical outlook that I gave in the annual soybean chart, Jesse, that these would be the reasons why the market would go ahead and keep selling off into soybeans if we don't have wheat and corn and crude oil come in and kind of save the day.
Mike Zuzolo with Global Commodity Analytics is our guest analyst here today on Market Talk. Let's look at the world corn price chart, just as we kind of dive into the corn market a little bit here on today's show. A lot of different movement on this chart. What's the biggest thing standing out to you right now when it comes to world corn prices, Mike?
Yeah, a lot more competitors. You know, wheat and corn. This chart gets a lot busier on those two feed grains, and that's why the wheat and the corn I think dance together well, and why the wheat ultimately leads the corn, because there are so many more competitors, and both can be used as a feed grain at the right price. This chart suggests to me, since we're again in red, and that's the second position at New Orleans, we're the lowest of all of our major competitors right now. And if you look at France, for instance, the top end, they and Romania has been some of the cheapest corn out there earlier, like back in the very beginning of the year. It was way down there, kind of like with not far from Ukrainian prices. So we've got a really high price in the world corn market. And notice that Paranagua price in Brazil, that's the orange one, that's starting to taper down now that the weather has turned around. So to a lesser degree, we'll probably see more corn get out the door if Brazil gets back on track. But this is where the Argentine weather comes in to play. One of the big things I think that helped the Wednesday trade and why wheat and corn turned back around to as leaders to the upside was because we've got Ukraine corn and wheat still not getting the necessary rain they need, especially in some key areas of Ukraine's corn production areas. And then a Newswire story came out about 40 minutes, 30 minutes before the close on Wednesday. And the headline from Reuters was polar winds could intensify dry weather in Argentina, hitting wheat and corn. I think we're starting to see, Jesse, now the trade start to look at Brazil as mainly beans because of the China-Brazil relationship on soybeans. And Argentina, though, probably is more about wheat and about corn. And this goes right back to the ultimate idea of this global drought, that in wheat, it is a practical, real situation that's done material damage. In corn and beans, it's still mostly theoretical. And nowhere is that more important than in the hard red wheat belt of the United States. And I think it's absolutely critical in the next 2 weeks to see quite a bit of rain come in to Oklahoma, eastern Colorado, western central Kansas, and southern Nebraska, because these colder temperatures are probably going to really shut down the planters, because the germination under this kind of cold just won't happen.
One other thing I'll throw out here for grains before we go to livestock, in terms of the weather, a lot of great points you made, and I feel like in the case of South America in particular, a lot of chatter I've heard from folks in Brazil who've been messaging us have been saying, we'll get beans in. It just might be some thoughts of, does safrita corn get delayed in early 2025? And I think that's kind of that unknown right now for South American weather, that it's going to be a few months before we really get a good answer that impacts the markets one way or another, Mike.
Yeah, I think that's 100% right. An excellent point, because you do have in recent years Argentina and Brazil swapping corn back and forth in terms of exporting and importing to one another. I talked to a producer today about the idea that if Brazil does get back on track, and we got to realize meal has led this market lower. That's your livestock market, and we still don't know what's going on in the Southeast. We may not know for months. And so we really got to wonder about the poultry and the hog sector, both here and in China. And I think this is where it goes back to, could we see beans come into the Carolinas again? And could we see beans come into the East Coast? Are we going to have enough beans of good quality to be able to crush? Look at that NOPA crush number. I was very sick to my stomach on Wednesday when I saw the beans take out their Tuesday lows when the wheat and the corn were going higher, because beans have had a great demand week. That NOPA crush number was a September record. We had a huge export inspection week, and we've had very good, strong cash basis starting to pop up as producers here are starting to wrap up their harvest. And so I would be very surprised if wheat and corn went higher on good China news late in this week, that beans wouldn't follow suit and hogs wouldn't follow suit.
Let's talk livestock. Hogs had a good day Wednesday. I'll get to those in a minute, but I want to talk more on the cattle market with you. Let's pull up a live cattle chart looking at lead month futures here. Cattle were more mixed on Wednesday, kind of timid. And I know we had plenty of technical selling Tuesday across the entire protein complex. So walk me through what are you watching in live cattle futures right now, Mike?
Yeah, a lot of triggers are getting hit in this fourth quarter, and I'm getting itchy to go ahead and make hedges in live cattle. I haven't done it yet in fats, but this is one of the key triggers, and this is the managed money positions on futures and options for live cattle. In yellow, that's the bar. So we're at over 77,000 contracts now. You notice that's a new 2024 high, and the highest we've been since about a year ago in mid to late October of last year. The purple line in the left-hand scale is where we're at in fat cattle, right around that 187 level. Notice how the fat cattle and the negotiated cash price are really working well together. So I see this chart. I see USDA's WASDE numbers last week. Their fourth quarter numbers really raised some eyebrows for me. They raised the production 125 million pounds. They raised imports, and that's just quarter four. They raised imports 55 million pounds on the year. They cut exports 35 million pounds, probably because of what the dollar's been doing as far as going higher. But yet they went ahead and raised their fourth quarter steer price from 183 to 186. That was after being at about 190 back in the August report. So we're all over the place right now in steer prices for USDA. And this says to me, as the funds get more and more long, if the stock market doesn't stay strong and the hogs don't stay strong, we are probably going to see a pretty significant setback. And that's kind of what I'm planning for with those Dees futures.
Well, and looking at the Dees live cattle chart as well, I think this just kind of can help to illustrate your point. I mean, I take one look at this and look at kind of that line drawn from the low up to where we're at now. I mean, pretty steady climb here for a little while now. So wondered if we're starting to top out again a little bit here, Mike, to your points.
Yeah, I really like what you just said, because that blue line, that support line you're talking about, and the white line is the 20-day moving average. You know, when in cattle, and I can say this because it changes, so it's not like I'm giving away any kind of trade secrets that I've worked on. But right now, when you've got a trend line and a 20-day moving average working so closely with one another in the fat cattle, I put a lot of reliability on that, Jesse. If we close below that, especially with that white and orange line giving a sell signal in the oscillators. And so that's my go no go gauge. And that's why a lot of people call me and say, you know, you talk well, you talk a lot about stuff, but what are you actually going to do about it? And that's a fair point. You can wrap yourself up in the analysis and not do anything about it. That's what you do about it, is if you take the blue line and the white line out together on a closing basis, and especially if you take out these weekly lows that we just put in place, I think it's a great time with these nearbys to get some puts bought and expect potentially a pretty substantial correction. And I think seasonally, that's what we do. And I think that's where the key is with these weights. It's going to be tough to keep these prices elevated this high level in a counter seasonal time period.
Let's close on a high note. Hogs had a solid day, futures wise, Wednesday. Dees hogs now the front month. Any big notes for you in that hog market midweek, Mike?
I'm hoping that the hog market's already sensing this new China stimulus package, that they're trying to get ahead of that, Jesse. And so hogs and beans going opposite one another, that's something to really watch here. I want those two to sync back up together. I'm hoping that the wheat and corn stay strong. Hogs were kind of a predictor of where we were going to go, because China does go ahead and initiate a program to get their domestic consumption back and running. And most of the experts that are much higher level than me would say, you got to get the domestic consumption back through healing the property market and taking that debt off of those savers and off the consumers and just taking it off the books. And I hope that's exactly what they do through some type of bond program.
Mike, good stuff. If folks want to reach out to you, take a look at your analysis and more, how can they get in touch?
globalcomresearch.com, and that's globalcom with 2 M's, research.com. You can get a 10-day free trial if you sign up.
Mike Zuzalone with Global Commodity Analytics. Always good to talk with you, sir. Thanks for joining us on Market Talk. Appreciate it.
Appreciate you having me, Jesse. Thanks.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.